All right, what's up, everyone? You are listening to the weekly roundup edition of On the Margin. I'm your co-host, Michael Ippolito, and I'm joined, as always, by the indefatigable Tyler Neville. What's going on, Tyler?
Indefatigable. Don't sleep much. Never get tired.
You're relentless in your pursuit of knowledge. That's what I'm going to say.
Should I make my weekly comment about your shirt this week? Or are we going for like cool hipster, Williamsburg,
Let's
Brooklyn,
get it out of the way.
vibe?
Let's get it out of the way. Let's get it out of the way. What do I got to wear? Do I got to just wear a black t-shirt? Is that...
Dude,
is
just
that,
wear the factory man's clothes. Be a man of the people. That's
my
me.
God. All right. Christ. All right. I'm going to completely redo my wardrobe. I'm just going to get very plain crew neck t-shirts, single color. Boom. You've done it. All right. I hope that was the outcome that you wanted. All right. Let's get into it because we've actually got a pretty big week here. Only 2 stories this week, right? And there's only really one that we want to spend a lot of time on. Elon Musk issued a statement that Tesla would no longer be accepting Bitcoin as payment for their cars. And then I also want to talk a little bit about the probe into Binance by the U.S. Justice Department and the IRS. So let's start with the Musk Tesla news because this has obviously caused quite a bit of a stir on Twitter. I think there's a lot to unpack here. So I'm just going to go rapid fire here on just what the facts are, and then we can kind of get into our opinions, contextualizing everything. But here's what actually happened. So on Wednesday, we're recording this one day early, Thursday afternoon this week. So yesterday, Wednesday, Elon Musk released a statement from his Twitter that Tesla will suspend vehicle purchases using Bitcoin. In his exact words in the statement, "We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Cryptocurrency is a good idea on many levels, and we believe that it has a promising future, but this cannot come at a great cost to the environment. Tesla will not be selling any Bitcoin," which everyone on crypto Twitter honed in on, predictably, "and we intend to use it for transactions as soon as mining transitions to more sustainable energy. We're also looking at other cryptocurrencies that use less than 1% of Bitcoin's energy per transaction." Elon followed up by citing data from the Cambridge Center for Alternative Finance, the CCAF. They basically put together this index, the Cambridge Bitcoin Energy Consumption Index, which estimates Bitcoin's energy consumption on an annualized basis. So at the current time, they're estimating that Bitcoin's annual usage is 144.82 terawatts. In case you were like me and have no idea what that means, that's about 0.55% of global energy production and roughly the amount that a small country like Sweden might consume. So that's what's going on here. Now we can kind of contextualize this. Why do we think Elon's doing this? What does this really mean for Bitcoin and the industry as a whole? I think for me, we might not agree 100%, so maybe this will be interesting.
Yeah, I want to ask you, because you're deeper into the crypto stuff, and I come at this from like a macro perspective. But I think it's better to go bottoms up because I think your knowledge of this stuff is far surpassing mine.
So I think that the theme of this weekly roundup is Bitcoin is growing up. We've talked about before how Bitcoin, as it gets elevated onto the world stage, it deserves a better class of, honestly, critics and just more nuanced discussion around it. And for a long time, Bitcoin, as it goes through waves, it gets what's called FUD, right? It's just fear, uncertainty, and doubt. And for a long time, the environmental impact of Bitcoin has been labeled as FUD. I'll be clear, I'm still very bullish on the long-term prospect for Bitcoin. This hasn't fundamentally changed my view. I do now think that this is just an area that needs to be addressed in a more nuanced way than the laser-eyed, people on crypto Twitter saying, this is actually a good thing. And, I saw some posts, it was like, of that statement that I read out, it was like noise, and then they boxed in signal, right, on big, and they didn't sell any. And there are these tweets that Elon is trying to push the price down. Guys, you were missing the point. He clearly said what he meant. He is concerned about the environment. And look, at a certain point, Bitcoin uses a shit ton of energy. That's not really debatable. We can get into the nuance of how actually they use a lot of, it's actually the energy mix that matters. And there is something about using stranded energy that's not as damaging to the environment overall. but you can't just go out and say Bitcoin doesn't use energy. It does. The big question is, what are you getting for that energy consumption, right? Is the output of Bitcoin actually something that is a net positive to the world? If you believe that Bitcoin is a net positive, then you say, okay, well, there's obviously a cost to that. Everything that we use causes energy to some degree, right? The internet takes energy to run. Countries in general, militaries, governments, everything requires energy. You're my life force, our sustenance, right? We use energy to collect food. The question is, when you are expending energy on a network like Bitcoin, what are you getting in return? And that's kind of a hard question to answer. But I think overall, yeah, I don't know. This is something that's going to actually need to be wrestled with. And in a space like Bitcoin, crypto in general, narratives is just really important. And because these are really reflexive assets, right? Which, when you don't have a great understanding of the fundamentals, price essentially tells you or tells people broadly the value of the asset. So everyone cheered as Elon pumped the price of Bitcoin essentially from 40K up to 60, and was like, all right, meme god Elon here, hell yeah, meme us all the way to the moon. And now it's going the other way, and suddenly people aren't happy. So
I have a whole separate read on this.
I know you do. All right, so give us the macro view here, because we approach this from totally different perspectives.
Yeah, while I'm not discounting the energy impact, I'm not like a climate change denier, and I'm very moderate in terms of that stuff. I think this is it's a fugazi. It's like the Prestige, where he's trying to do one thing over here and doing something entirely else over here. What I really think this is Elon Musk knows the cost of capital is rising. And I'm going to walk you through kind of what's going on in the macro market. And what he is doing, he's moving one step closer to selling his Bitcoin, because he probably needs to conserve his cash when the cost of capital is rising in the marketplace. For the past year, unprofitable companies and very risk-forward companies have gotten the benefit and the wins at their back from the Fed, fiscal policy, and all that stuff. Now, here's how it starts. IPOs and SPACs have been on wildfire, right? They've gotten a low cost of capital that's unjustifiable. And what's happens when they go public is there's a really small float to the shares. So every incremental dollar that goes into these stocks pushes up the price. Now, what kind of happened was ETFs that kind of invested in innovation and all these new futuristic technologies, they all have really small floats. And after 90 to 180 days after, the floats open up, insiders are allowed to sell. Now, when insiders sell, they can sell almost double the amount of shares in the float. And that's what's really pressuring these ETFs like Cathie Wood's, is there's more shares available in the floats in these underlying stocks that are held in these baskets. And that's pulling down Tesla, that's pulling down Bitcoin, because she owns some of that. She owns GBTC, she owns 7 million shares of GBTC, and that's pulling down the entire spectrum of these very risk-forward things. I think Elon knows he played that card on the way up, and now he's like, oh crap, on the way down, it's going to get ugly. I need to manage my cash, because we're still not at Amazon, takeoff speed. It's a high capital expense business. He needs to manage his cash. This step is a virtue signaling external kind of thing to say, oh, you know what? We did more work on this and we sold our Bitcoin. Now we take that cash, right? And they probably already sold it. We don't really know. But I think this is a cash conserve play when the cost of capital is going up in the marketplace. And now take it one step further. Here's 3 examples of stocks that are high flyer, low float stocks that are now imploding. Palantir's down 21% year to date. Snowflake's down 31% year to date. Affirm down 50% year to date. Now, Max Levchin is the CEO of Affirm. He is part of the PayPal mafia. He probably is talking to Elon Musk and saying, hey, listen, this is sort of what's happening. The supply of all this stuff is overwhelming. Get prepared. Cost of capital is rising. I think he's preparing his balance sheet so that he can this whatever this outflow of assets is until the Fed starts yield curve control and there's another big fiscal push. This is him preparing for the downside. Because like he's still a very risky company. He's in all these fast growing ETFs. You know, he's one of the biggest ETF like names. When they do a new ETF, Tesla goes in. So I think he's preparing for that with this like charade of like saying, you know, ESG is like, you know, we're not selling our Bitcoin yet, but there's another alternative. It's a charade. Like he is the king of this. And I think that his true gift is he understands that like in a market with 0% interest and like where you can lever up your company and borrow money at zero, you know, convertible bonds for like moderate amounts of interest, he needs to do that ad infinitum to make Tesla work. And it's impressive. And that's really his real motivation.
So I'm curious. So in that scenario, right, the big unknown here is they're not selling the Bitcoin that they have, although they did sell a little bit to quote unquote test the liquidity. Maybe some people feel differently about that now, but he only is stopping accepting payment for Tesla vehicles in the form of Bitcoin. We have no idea how many people are paying for Tesla in Bitcoin. I would guess it's a really small number. Same reason why no one uses the Lightning Network. Nobody wants to spend their Bitcoin. Dummies. Why would you do that? It counters the entire narrative, but you don't actually know how significant this is. If so, in your macro case here, he actually needs to manage his cash position. Why hasn't he sold his Bitcoin?
I think this is the moving a piece on the chessboard that gives him the right to sell it at some point. It's him saying, okay, I'm not being flippant about this. We did our research. Now we're selling it. But he's really probably just looking at like all the garbage going on in the market, the Fed getting pressured. Here's the other big macro thing going on. Inflation just hit 4.2%. The Fed's buying $40 billion a month of housing. They're definitely going to stop that because everyone's like, holy crap, there's no housing left. And then 80 billion a month of treasuries. And there's now like the beating drums saying like, you guys need to like reel this in a little bit. Even Rick Reeder from BlackRock was like, yeah, they need to pull back on the stimulus. So I think that's really where they're all preparing from, you know?
Yeah. You might be right. I think like to zoom back in on the micro of Bitcoin a little bit, one thing that really threatens Bitcoin here is this ESG stuff. I don't know what your opinions are on this. It's really hard for me to tell if this is real or not. I am not in the world of ESG. I will tell you, coming from the world of consulting, I'm scarred when I see these, you know, like if you look at ESG, like what's in our matrix here, and they have these little definitions of like, this is what constitutes this. I'm like, this is bullshit.
Yeah.
This just reeks of bullshit. But I will tell you, like the facts don't back that up. So if you look at the amount of flows so this is a Morningstar study, they're kind of tracking flows into ESG open-ended funds. Last year, I mean, it's been, you know, it's parabolic, the amount of flows that are moving into those types of funds. So last year, 51 billion in AUM flowed into funds like that, 20 billion coming in Q4 alone. If you also look at what institutional investors are saying, there's a clear mandate to become more environmentally friendly. So you've seen kind of chatter from BlackRock, and then potentially exercising some control over their investments. In September of 2019, investors with totaling 2.4 trillion in assets, that's probably like 4 trillion by this point, they pledged that by 2050, their entire portfolios would be carbon neutral. And that includes the likes of CalPERS, CDPQ, Pension Denmark, Swiss Re, Allianz. These are real people. So what I could imagine being really damaging to Bitcoin is if Bitcoin gets labeled as an asset that's bad for the environment, that could impact the flows into Bitcoin, right?
Yeah.
And we talk about this framework. Bitcoin is essentially this Pac-Man, which as it gets bigger and bigger and bigger, it unlocks new sources of demand. This could damage that bid.
That's a really good point. And no, I would not discount that. And I'm also for like, you know, all ESG stuff. I just don't think. I think about the opposite, which is like how much wasted energy happens elsewhere, and this could be. And that's just my English brain rather than like a scientific math brain. So maybe I'm not the person to ask on this, but I gotta imagine that this network is so much more efficient than like billions of people exchanging paper tickets. I don't know.
Okay, so here's the bull case for Bitcoin from an energy perspective. So it does actually incentivize capture of energy sources that are heretofore being wasted, essentially. So there's a big problem in energy grids. The technology to transport energy over great distances doesn't really exist, or it's completely not economically feasible to do so. So basically, that means that you kind of have to use energy at the site that it's actually produced. Now, if you're looking at fossil fuels, right, which are that industry is mainly responsible for carbon emissions and climate change in general, they do this process called flaring, which basically they release, they burn this stuff into the atmosphere because they've got no other way to use that energy. It's the best way to get rid of it. So essentially what you're seeing is mining rigs set up in these places locally, and then they can sell that energy. They can use that energy to actually put it to productive use in the Bitcoin network. So what you are seeing, the bullish sign for energy in general, is that the Bitcoin network is actually coming up with more efficient, positive uses for that wasted energy.
Huh.
Now,
I like that.
so that's very cool.
Yeah.
That's very cool.
Yeah.
On the other hand, it's unrealistic today to say that the majority of energy that gets consumed by the Bitcoin network is producing carbon neutral waste. That's just not true. But you could see a future where that actually is the case, and I think it is literally going to take this industry. We have to rally around those sorts of uses.
Yeah, I think that's fair to say.
Yeah. All right. So
What's the fallout on this?
Okay, I mean, it's kind of funny. Like, we've talked about how stuff that should move the market doesn't, and then stuff that shouldn't move the market actually does. So Elon Musk helped us meme our way, from 40,000 to 60,000. That's not an insignificant amount of movement for the market.
Was that really what it was though? I have a hard time believing that. Like,
It was a big part of it.
I think that's I don't think people make investment decisions at an institutional level because of a guy who's turned out to be flippant and like kind of crazy and wants to go to Mars. Like, I think they're looking at it from like a more mathematical perspective, which is really just an arbitrage of interest rates. And you can get the futures curve offers a better return than it does in, anywhere else. I think that's the decisions that's being made on an institutional level that took us, to 60K. But yes, it's a great story. The media loves it. They love, the Einsteins and the Thomas Jefferson type brainiac Teslas and Elon Musk's. It's a great story to tell. But like, I really don't think that puts billions and billions of dollars to work. It's not like are people that much of a lemming to be like, okay, now I got the free pass. Elon Musk can do it. Like, I don't know. I'm curious. I'm really hating.
I don't know, man.
Am I hating?
Just looking at what happened. Look. I will say this. Look at what happened after this news came out. The market dumped 20% in a span of like 3 hours. So
yeah,
it's, at the time of this recording, Bitcoin's like flirting. It's around 48,000 or something like that. I will say one bullish thing just in terms of the short term is it seems like there's a really strong, I am not a chart guy. My God, I can't even believe I'm mentioning, but it looks like there's pretty strong resistance around 47,000. It bounced like a rock. You can see on the chart if you pull it up, like it just boom.
Yeah.
All right, that's the extent of my technical analysis. So.
Technicians.
Oh God. So I will say that's good. But look, I mean, he announced this and the entire market dropped 20%. And it was led by Bitcoin.
Yeah, but is that really what made it drop? Like, I would argue that it's more GBTC. Like, GBT's underperformance, 20% discount to NAV. Like, there should be hedge funds in there scooping up that ARB, left and right. But the truth is, it's because Cathie Wood's getting outflows because of all the non-profitable tech stuff. The way I look at it is completely different. Like, yes, I think that the headline gives the impetus. It's like the straw that broke the camel's back. Is like you have this like market structure that is so weak right now, given the outflows, and then that just hits it over. what's fascinating to get into the next part is the Binance news didn't move it.
Wait, before we get into Binance, so the
Okay.
last, I actually think, sorry, the most important conclusion from
Okay.
this entire thing is if you look at the relationship between ETH and Bitcoin.
Hit
So,
me with that.
yeah, so one key level that a lot of people pay attention to is ETH to Bitcoin, right? And that's essentially what you get. That's the ratio of the price between ETH and Bitcoin. If you look at that chart, it is going in a steady upward direction like this. And this was actually happening before any of this news, right? So it was kind of hovering around, like I think at its very low, it was like 0.03, then it moved to 0.45, then it was 0.55, now it's zero point 0.7, it's 0.75. There are really smart people in this space, like the likes of 3 Arrows Capital, basically saying that that trend is only set to continue, and it now seems like one of the big outcomes here might be an ETH Bitcoin flippening. That long-awaited flippening might actually happen. And I think one of the interesting, if you're in this community, if you're in the community of crypto and digital assets, you're going to see some inter-community warfare break out here.
Oh
Yeah,
yeah.
some real conflict. And it's going to be centered around this like proof of work, proof of stake narrative. And
Wouldn't that make sense to what would happen though? Like that, it's you can't have so many winners. Like you have to have kind of like these little battles.
yeah,
If you can't have 10,000 projects, you know, during the 2000 tech boom, you had all these companies go to the wayside. Josh Wolf, big fan of his. He's like 90% of VC backed companies are dog shit. It's only 10% that really have something. And so if this is the end of the macro cycle of this next cycle, that's what you would see is that battle of you know who's going to win the battle, who are the last men standing when the cost of capital rises
right.
and the
I have no.
narratives die.
Yeah, yeah. Well, so this is here. I'm resurrecting an old narrative. There used to be a lot of discussion, you never hear it anymore, between proof of work versus proof of stake. Like, that was a thing that people spent a lot of time debating at one point in time.
Yeah.
It seems like proof of stake has won out on that. That doesn't mean that Bitcoin is going to become obsolete. I'm just saying none of the new projects that you're seeing are even trying to do proof of work. They've all pretty much failed. And I think people will argue over that. I think that will be the narrative that you see play out. But to me, the more important narrative actually, crypto is governance. Seriously, crypto is an innovation in governance. It is a new way to own networks. It is a new revenue model, and it is just a new form of governance for money and networks. So, you know, one of the primary assets that any of these protocols have is the community behind it. So when I purely look at the Bitcoin community versus the ETH community, I'm not saying I'm in any one of these camps. I don't really care. I support everything. I'm happy. I'm a cheerleader. I'm a
I
supporter.
take ad dollars from anyone who wants to give them to
Oh
me.
God, Evan, we gotta cut that out, bro.
Yeah.
Um,
Just kidding.
but what I will
You're pretty
say,
balanced and objective. Yeah.
is that it seems like Bit, and you can see there's good reason for this, right? This is kind of actually in a sense, it's a bull argument. Like one of the things that makes Bitcoin so trustworthy is it has this really calcified kind of community, and to get any changes passed through that Bitcoin network, it takes a lot of force. Basically, it's really, really difficult to do. ETH is not really like that. You're seeing huge changes to the underlying consensus mechanism that's being organized by this community. I think in the long run, I would actually bet on a community that's more flexible and open to innovation. That's not to say that Bitcoin is not worthwhile. It certainly is. But that's the viewpoint I'm starting to determine here. Like I think over long stretches of time, flexibility and openness to innovation, which is clearly core to the Ethereum ethos, I think that stuff wins out in the long run.
Yeah, talking to the institutional desks, they're saying that they're now seeing an abundance of ETH institutional buyers as they get their heads around DeFi and how to generate yield and the products that you can kind of get access to there. I think Bitcoin was the first story. It's like, hey, look at this thing. It's email. You can send electronic mail, you know, and then, you know, ETH is kind of like AOL Instant Messenger. And you're like, okay, I can send like GIFs on this, and I can send, weird website links and all other stuff that's like different. And I think the dynamic nature of ETH is what's appealing now to institutional investors. Whereas I don't think Bitcoin's gonna die. It's still
Not at all.
it's still
No.
gonna eat gold. I think it'll still arb 10 trillion in capital from gold.
Oh my God. Wait, can we talk about gold for a second? Hey, gold. How you doing there, buddy? What's going on?
Well, dude, how about this? This is why I think the flows are mostly driven by ETFs and Cathie Wood. Gold's up today. This is why you own inflation assets. Is in this atmosphere, you're at the end of a long-term sovereign debt bubble, and gold's back at 1850, silver's up at $27, and I think that's really what Bitcoin should be doing, but it's getting roped in with the flow show out of these passive ETFs, and that's just what happens when you get paired with that stuff.
Yeah. I
So
agree.
I don't know. Interesting divergence.
It's probably a better take than what I was saying. I think overall, just to sum up what we just talked about, my takeaway here is I think this is a bump in the road for Bitcoin. I do think that in the short term, this community needs to usher better responses to Elon's whatever he's tweeting out we just need to improve the dialogue around here as an industry, I think, is my big takeaway. Crypto's growing up. When it gets a more elevated place on the world stage, it deserves more nuanced discussion and the ability to handle criticism. I think that Bitcoin tends to have temporary correlations, and I think this is short-term price action, and this doesn't change my fundamental thesis about Bitcoin. To me, the most interesting thing is to look at the relationship between ETH and Bitcoin. And I think there's a not too small chance that this just ushered in or moved ahead or increased the percentage chance that there's going to be a flippening. That's my big takeaway.
Yeah, well, we will be watching. I still like them both. I still think we're heading into a highly.
I still like them both. I don't want to get ripped apart on Twitter. Is basically I'm just hedging my own my mentions. If I got any engagement on Twitter. All right, on to this next story. So let's talk a little bit about Binance. So this actually just happened earlier today. So who knows? Even by tomorrow, and this comes out, there might be more information. But essentially, the U.S. Justice Department and IRS is looking into Binance. I want to get this out there and just say immediately the exchange is not being charged with any issue of wrongdoing right now, which is really important to state. Basically, the two agencies, they're investigating issues around money laundering and tax violations. It seems as though the money laundering is of greater concern than the tax violations, but they're two separate things. So basically, Chainalysis did this report last year. They found that more funds tied to criminal activity flowed through Binance than basically any other exchange. And actually, if you look at, there's a lot of focus being paid attention to this because there's this recent cyber attack against the Colonial Pipeline, in which $5 million in Monero was paid out in ransom to these European hackers. So it's kind of fresh on everyone's mind. Also, the CFTC is worried that U.S., technically Binance blocks U.S. residents from transacting there, but they're worried that U.S. residents are engaging in derivatives-based transactions on the exchange. So that's what's going on. That's what's going on there.
Interesting that didn't have a bigger reaction in the price of digital assets, or maybe it was paired with the Elon Musk stuff too. But
yeah,
the headline sounds scarier, and I think that this is something that we all kind of knew was going to happen eventually.
Yeah,
anyway,
I agree.
It's grown up, like you said. You got to kind of unturn those rocks and deal with the consequences of building a basically transcendental system of transferring value. Do you like that word? That was my SAT word.
Let's see the thesaurus. You definitely got that.
Transcendental.
Do a spelling bee.
What's your vibe on this?
I think overall, the reason why the theme of this episode is just Bitcoin growing up is I think sunshine is the best disinfectant, and there was no way, like, I think everyone knew that crypto wasn't going to continue to operate in the way that it has in the past. As it gets larger, we need to find a way to bring this to a more mainstream audience. And also, look, there are laws. We have laws for a reason. So there have been a couple pretty high profile investigations recently of kind of differing severity, but you saw Tether, you saw Ripple, you saw BitMEX all get investigated. And by the way, none of those should have been surprises. Those are things that people have been saying most likely should or will be investigated for long periods of time. I'm not making any comments on my thoughts on any one of those three, but I think at a certain point, we are just going to have to interact with authorities in a more transparent way. I'm not saying that the authorities are always right. There will probably be huge botches in terms of enforcement and regulation, but overall, we got to fit a framework around what's going on here. And I think the reason why the market didn't sell off is once you get past that headline, you can see that Binance is cooperating. It seems like they're acting in good faith, and probably it will make institutions feel better, right? Knowing that enforcement agencies are paying attention to this, because if they think that they're operating outside of rule of law, guess what? They're not going to get involved.
Mm-hmm. Yeah, that's a really good point. I think it's, if anything, it just makes it, you get the compliance check from your institutional asset manager and say, now they're cleaning the business up and we're all good. Like, liquidity is coming in. That's the big thing in the room.
Yeah.
And you have the right people on the right seats over there. I think, the Brian Brooks being there is huge. They're talking to the right counterparties. So it's not like they're kind of trying to close the books on anybody. That's my read. Yeah.
And for those unaware, Brian Brooks, for a little while, he was the acting head of the U.S. Comptroller of the Currency, right? So he passed a lot. He was at Coinbase. I forget if he was their chief legal officer. He was high. He was senior on the legal team, basically, at Coinbase. And he passed through a lot of kind of friendly regulation at his time at the OCC. So, yeah, I mean, in retrospect, it probably looked like Binance knew that this was coming. They're also, you can tell, like, Bloomberg was the one who broke this news. You can tell from that article, they're also kind of staffing up on their presence in DC, which, again, like, none of that is wrong, right? That's exactly what's supposed to happen, right? You actually want companies to be able to speak and advocate for themselves and the industry in general. I think this is all happening kind of as it should, basically.
Agreed.
Yeah. And I will say it's better for everyone, including U.S. institutions.
We agreed on something, by the way, today.
Look at that. Usually we're in agreement. Yeah. I mean, there was this one funny episode where, like, you were totally wrong and, I presented the right view. But, yeah, usually we're totally in agreement.
Yeah.
I will say, like, the last thing on this Binance thing is, if you are, like, one of the biggest challenges for sophisticated traders in this market right now is just the fragmentation of liquidity across all these different venues. And, we've talked about the basis trade, which is essentially, going short futures, buying spot, waiting for those two values to converge, and you essentially extract that yield. Those opportunities are only available, for the most part, on these offshore exchanges. And if you're a U.S.-based institution, you can't trade on those exchanges. So you're essentially limited entirely to CME if you want to trade derivatives. And that arb does not exist on CME. So
yeah. Isn't it crazy how fast
this is good?
Happened? Yeah.
I know. So all this stuff is good, I would say. But yeah, look, I think overall it was a big week, but nothing here should shake anyone's fundamental. I guess if you were surprised by any of this stuff, it's like, then you should reevaluate how serious you should, because the Binance thing shouldn't be surprising. I think if anything, this is a positive development. And Elon, Elon's Elon. He's meme lord King Elon. I still think the jury's out. We'll see if that guy goes down as a hero or villain in the annals of history. We shall see.
I don't know. Here's why I think I said in one of my newsletters this week. It really comes down to a policy decision, because right now we're in this pocket of, I think we hit a high inflation print. The CPI hit 4.2. That's putting pressure on the Fed to tighten, to taper, and essentially, like, that's taken the market just fell on that massively, right? Because they're now like pricing in some sort of tightening or at least tapering. And I think at some point the fixed income market will constrict up, and they'll have a choice of whether or not to let deflation happen, let a little bit of froth come out of the market. But I don't think they will, because pensions are only 80% funded. I think they're going to make the case to cap yields, keep printing, and then Tesla and all the other, crazy stuff takes off again. But right now we're in this like the commodity inflationary pressures have picked up enough to put pressure on the Fed to raise rates. And now we're in this purgatory of a political decision. And I think we'll probably stay there and bounce around a while until we get, 10-year rates really spiking here. I think we're in this like consolidation phase. But longer term, I'm going to bet on the Luke Groman's like, you have 130% debt to GDP. You're going to have to print your way out of this, because if you don't, we're in an actual depression. And so I'm holding on, to my Bitcoin, and maybe I'll lighten up a little bit on the alt stuff that's, a bit more risky. But longer term, I'm like, God, I don't see any other way out of this but inflation. And the dollar will tell us. We had a big bounce on Wednesday, and the dollar, it's kind of falling again. We'll see if that keeps going.
Oh my God, this was a big week. We didn't even talk about Stanley Druckenmiller saying that the US dollar would lose reserve currency status in 15 years.
Yeah. I mean, that guy has it stone cold. Like his backdrop, his macro view of things, he trades around it and expectations and what's happening a year from now and what your comp was a year before and all that stuff. But like it's unflappable of what he said in 2015 to now. The problems have only gotten bigger and worse. And debt to GDP grows, the liabilities of the government grow, and growth just will never keep up. So the only relief valve is the dollar falling.
And I think that, just to maybe present a super bullish case for Bitcoin, I mean, that narrative for Bitcoin just has not changed in the slightest bit, right? If you look at the way the existing system is set up, what the different pressures are, central banks, as much as people hate on Jerome Powell, they're doing what they absolutely have to do, right? This is an issue of demographics. It's stunted growth. You can't, we have all these liabilities, in the form of things like pensions and other stuff that we absolutely need to meet in order to get from point A to point B. The best mechanism that we have is to just print dollars and devalue the currency.
Yeah. But Druckenmiller made a point to that point. You know who pays for that the most? He said, it's my kids in Harlem. It's the people who get killed from the commodity inflation, the inflation of the dollar falling. And that's the bigger problem. And we're going to have class warfare. If you don't.
Intergenerational too. Intergenerational. People don't talk about that a lot. But yeah.
And here's the last thing I'll say. I got some kickback when I called it a boomer Ponzi scheme, which it's kind of a joke. But if you really I wanted to say it more out of like the ethos of what millennials and Gen Zers feel that haven't basically hit a home run in a fast growing tech company. It's like they're delaying marriage, they're delaying having children, they're not getting in relationships. Japan did this before. People aren't getting married in Japan either. And it's who pays all the liabilities if your population is shrinking. So I wasn't trying to be like, screw you, boomer. I was like, these are real things that just the mainstream media will catch up to in, I think, the next couple years. And when the boomer control of stuff kind of falls, we are in the fourth turning. Like if the Trump presidency and all this stuff hasn't taught you anything, we're in the fourth turning. And I think we're going to have to talk about these issues because they're going to get worse and worse if we don't. I probably shouldn't have said boomer Ponzi scheme, but it kind of is. Everything's kind of a Ponzi scheme. Bitcoin's a Ponzi scheme. The difference is Bitcoin's confidence is growing in the Ponzi level, and this legacy system, the confidence, it's all a confidence game, is declining because you need the majority of population to believe in something, believe in a system. The equity needs to be distributed, equitably, right? Right now, that's not happening. Like,
So, to be,
and I don't think
I
that's
mean, how do people
political.
define a Ponzi scheme? If you just define a Ponzi scheme as any scheme that needs to grow in order for it to continue to be sustainable, then yeah, every single thing is a Ponzi scheme. I don't actually understand that because, like, I get it. When you think of Ponzi scheme, you think of Bernie Madoff, and that is clearly a Ponzi scheme because there's
Yeah.
nothing really productive going on. But if you only are defining a Ponzi as something that needs to grow in order to be sustainable, you're describing every economic system. So, congratulations.
You are, but if you do it just with debt, that's where I think the confidence is waning. It's like you're not doing it out of like it's great when you grow a real Ponzi scheme and then grow real stuff out of it, you know? But when you do it and financially manufacture things by handing one part of the economy a large portion of debt to satisfy the liabilities on this side, that's that's generational warfare, like you said. And I don't see that why that's if I was a boomer and I was waiting for my retirement money that I paid in for, I'd probably feel a little bit like, screw you, like millennial. Like, I went to Vietnam. Who are you? And like, that is so fair. It's so fair. But it's also fair for millennials to be like, I can't afford, childcare for my kid and to work because both parents are barely keeping up with inflation. That's a real vibe in millennials and Gen Zers and Gen Xers too. And I just wanted to present that objectively.
I think that's a really good point. And actually, if you go back, what birthed one of the greatest periods to be alive in all of history, right? This huge economic boom that essentially took place in between. And I know there were periods of you wouldn't have wanted to necessarily live through, but like, the 60s all the way up through, now, I guess that all came as kind of a tertiary result of the GI Bill and the massive wealth transfer that was essentially a gift for saying, hey, you guys really put the entire country on your back. World War II, you suffered a lot. Here's a massive transference of wealth from us to you. And now
You got to write a bigger paper on that.
yeah,
I really want to hear about this.
yeah. So stay tuned for that. But I think this is just intergenerational kind of conflict here coming to a head, and everyone's kind of feeling at the moment like they've got a raw deal. I don't really know how it resolves itself. To be totally honest,
Strong leadership. We need some strong leadership.
we do need some.
We need
strong
someone to
leadership.
talk about this stuff. I think Biden's kind of getting there. I'm like, I think he's got some, family stuff coming down the pipe.
So I've got one. I'm watching this show on Apple TV right now. It's called For All Mankind. Really cool thought experiment. The whole premise of the show is what if the Soviets had beat the Americans to the moon in the space race back in the it's really cool. And it starts on the very first episode. The Soviets beat the Americans to the moon, and then it kind of tells this alternate story of history and how the space race actually would have continued because the Americans would have. And at that time, I've never understood really I didn't understand the significance of the space race. A, because I'm used to all this technology, doesn't seem crazy that we could go to the moon. But it was really cool seeing that through the eyes of someone who lived during that time period, how unbelievable that was. But most importantly, like how it just made Americans think we can do anything. We can do anything we want. We are a nation of doers. And I feel like they don't have that.
That ethos needs to come back. And I think that's the
agree.
biggest cultural thing is like, if you look at the music, the pop music, and it's laced with depressants and all that other stuff and drugs.
It's nihilism.
Yeah, it's nihilism, really. And like, I think it is, we need a belief. We need a strong leader to basically incentivize us and give us some conviction that like there's purpose here.
You need to unite people behind a goal as well.
Yeah. Like space is the perfect goal. We're going to space. We're going to space. And I'll never forget. I was at I was at an event with Mark Hart and Worth Ray, who run Corriente. These guys are like 5 years ahead of everybody, and they're like 2 years ago they were like space is the next big thing, and I think that as time passes, I'm like that's really coming to fruition because I think you need to unite people in a goal subsidized by like fiscal expenditure because that's a high capital expense to go to space. That's not like, hey, this consumer software is going to sell you this cool new lollipop. You know, you have to you have to get a nation on your back to go to space. And like you create all sorts of new stuff. You learn all sorts of new things. That's a growth mentality. And I think we're going to get back there. I think so.
Tyler, I can't believe you just offended the lollipop software
Industry.
surveyors of yeah, the industry.
Yeah.
That's a powerful industry, my friend. Not
Dude, the
one you
TAM
want
on
to
that
offend.
thing is huge. We're going to SPAC it. It's going to be huge.
The lollipop software. No, but I agree with you. You know who made this point too is Danielle DeMartino Booth. She's like, I mean, that's why, to be honest, I think the infrastructure bills are actually such a good idea. There's like some pride in actually doing. I really do believe this, especially, honestly, I believe this in America too. I don't think people want handouts. That's not what they want. They want to feel as if, and they actually want to achieve and put in the work. They just need wins. It's kind of like when things are not going well at a company, you need to give people really small wins because small wins lead to bigger wins and it's about creating momentum. And I wonder if there's an opportunity to do that through some of these infrastructure bills. You can actually build stuff that you can see and tangibly feel proud of.
Yeah. But you need the skill set. I think like here, I'll speak for myself here. Like I had a liberal arts education. It was okay. And I mean, this is a top 25 school and I was like I would never pay for that again. And to me, I'm like, I didn't really have a tangible skill set until I got out of school and started learning markets and finance and all this stuff. And like, and that's still not even like a tangible thing. That's just moving money from here to there. Like, I wish I had a skill set. And I think a lot of America feels like that, where I want to build something. Teach me how to build something. And a small majority of America actually can do that. And I think we need to teach people from the ground up, like real skills, so that we can build stuff with an infrastructure plan.
It's a really good point. So, I mean, a lot of this does come down to education, I guess. So, just a greater focus on STEM. Is that?
Yeah, I mean, I wish I had it. I should have done that, but it was 18 and full of testosterone and like not thinking further than a day out. I feel like I bet a lot of American males probably feel the same way. And luckily I found something that's like super fascinating and really makes the world work. But do I have a skill set besides like analyzing macro things and trading stocks and derivatives? Like, is that really a skill set? I don't know.
Tyler,
Yeah.
I'm actually realizing I'm not sure you have a skill set, my man. We got to talk.
Oh no!
The cover is blown. I know. I'm just messing with you.
Yeah.
Awesome. I think we've rambled long enough here. What are you up to? I mean, you're traveling, right? At the end of this week, you're going to SF.
Yeah, getting a little tiny dinner night away, meeting some buddies, and yeah, then back in and doing the dad thing again. So
doing the dad thing again. Nice.
Yeah.
Very cool. Are you
How about
excited?
you? What do you got?
What am I gonna do? I'm gonna golf on Saturday. I'm very excited about that. Extremely excited.
You know what I never got about New York City is like you have to get on like public transportation with like your clubs.
So far. It's
Is
so
it?
far.
This is the most miserable thing ever.
I mean, this is how badly I want to go. It's the nearest course is like an hour and 15 minutes away in New Jersey. Yeah, you got to lug your clubs on public transportation.
Yeah.
Then you got to go. Then you got to play. Then you got to go back. Probably gonna have a few beers. Not gonna be happy on the way back. I will tell you. Not gonna be a happy camper. But
Where
it's
in
a full-day
Jersey?
activity. God, I can't even remember. I just looked up the name of like a course that looked pretty good. I picked the closest one. I was like, boom, book it. Yeah.
Nice.
So we'll see.
I am a Jersey native, so just curious.
All right. Well,
Yeah.
I'll look it up. I'll actually look it up for you, and
Well,
we
yeah.
can compare
Cool.
notes. Yeah.